U.S. small business confidence continued to slide in October. That's according to the National Federation of Independent Business. As entrepreneurs face challenges like labor and economic uncertainty, another wrinkle now added to the mix. According to Goldman Sachs Small Business Survey, a credit crunch appears to be another main worry for business owners. Here to discuss this and more is Joe Wall, Goldman Sachs Managing Director of Government Affairs, along with Tutu Marsden, owner of Dell-Lea Weddings and Events. Thank you both for being here. And you guys, we should mention, are in D.C. You're talking about some pending financial regulation that you say will further add to some of these credit issues. Joe, it has to do with capital requirements for big banks like Goldman Sachs. What's the message that you're trying to bring here, and what are you hearing back from members of Congress?
Sure. Well, thank you for having us on, Julia. So to your point, we have about a few dozen small business owners on Capitol Hill today, meeting with both members of Congress, also senior officials at the Federal Reserve. And this comes on the heels of a comment letter that we are sending to the Federal Reserve this week from over 3,000 small business owners who are asking the Federal Reserve to really fully weigh and evaluate the impact of these new proposed bank capital regulations on small businesses. Reason why is that it is already quite difficult for small businesses to access capital. In fact, only 29% of businesses in our most recent survey say they can afford to take out a loan or a line of credit. And when you dig a layer deeper and look at minority-owned businesses, for instance, Black small businesses, only 26% of Black-owned small businesses who applied for a loan or line of credit in the last year received full funding. So that just speaks to how tough it is right now. And the capital requirements that the Federal Reserve are proposing is only going to make that all the more difficult.
And Tutu, let's bring in you as well here. Talk to us a little bit, Tutu, first of all, just about your business, what you all offer, and also touch on, as Joe's noting, this challenge of accessing capital. Is that a challenge for you, Tutu?
Oh, absolutely. Yes. So I am an owner of Dell-Lea Weddings and Events. We are a wedding venue that also hosts other events. And the challenges that we're facing right now is that when we go get a loan, when there's less capital for us to access, that's going to really put a hinder on our growth and what we need to do in the projects that we're have at hand. And so we want to make sure that we can get access to that. If we don't have access to the money in order to grow our business, then there's going to be our business that could be dire. There could be business that could close down forever, and then there's businesses that are no longer going to be able to grow, be able to hire the staff that we need to be able to expand on our products and services. And so I'm here with 50 other businesses here in Washington, D.C., but with 3,000 other businesses that have signed this. It's going to be a problematic for us.
Tutu, I'm curious, we've talked a lot about inflation. We've talked a lot about higher interest rates and the effect that they are having on consumers and on small businesses like yours. Can you talk to us a little bit about the environment right now and the effect that all that has had?
Yes, absolutely. So we've been, with the past 3 or 4 years, we've had to deal with COVID. We've had to deal with inflation, with pricing of with gas and utilities, and then food going up, and then also, we've had to had a lot of head issues with having to pay for a lot more. And so when this comes up, where we have to pay for more for the credit and pay it at higher interest rates, it really dampers what we can actually do. And so when we don't have access to capital, we need to make sure that we can get to that.
And Joe, when we say, talk about these small business owners who have this challenge of accessing capital, I'm just curious, Joe, are there certain small businesses that have more of a challenge than others? Certain, sectors, industry, demographics?
Yeah, it's pretty widespread across the board. I would say, where we did see a gap, which I spoke to a little bit ago, is among minority-owned small businesses. So whether it's Black small businesses or Hispanic small businesses, we do see a gap vis-a-vis the overall population when it comes to not only their views on capital, but also in the raw data in terms of those who have actually applied. I mentioned only 26% of Black small business owners that have sought capital in the last year received the funding they requested, and that is in contrast with 41% of the overall population. But I think that, the data right now is quite clear. It is a very difficult capital environment, and that's partly obviously because of where interest rates are, partly because of banks tightening credit over the last several months, in the aftermath of the Silicon Valley Bank and Signature Bank issues. And so the new reality is quite challenging for small businesses. And this proposal from the Federal Reserve, will just continue to kind of put the squeeze on small businesses.
At the same time, Joe, what's the balance of lending in this country from small businesses? When we're talking about the financial institutions that'll be most affected by these new capital requirements, it will be the largest financial institutions. What's the breakdown of how much of small business lending in this country is done by large institutions versus small? I mean, you could argue, would there be more democratization of that lending as a result of these capital requirements?
Yes, based on we just did a survey in October and asked, the business owners if you sought capital, as I mentioned before, in the last year. And we also asked, where did you seek it from? And roughly about just over 40% of small businesses sought capital from a large financial institution. And by the way, this rule wouldn't just implicate Goldman Sachs, Bank of America, JP Morgan. It also implicates the top sort of 27 US banks, anyone over 100 billion in assets. So most of the regional banks will be included in this rule as well, which are, significant sources of capital for small businesses.
Joe Wall and Tutu Marsden, thank you both so much for joining us today. We appreciate it.